Good morning and welcome to Street Signs. I'm Juliana Tattlebaum and these are your headlines. U.S. chip stocks are reopening for pre-market trade after DeepSeek's AI model sparks the biggest one-day wipeout in Wall Street history. Sartorius lines up its best day since October, surging to the top of the stock 600 after full-year revenue beats expectations. I will be speaking exclusively to CEO Joachim Kroesberg later this hour. SAP hikes its guidance, boosted by strong cloud business growth on the back of AI demand. CFO Dominic Assam tells CNBC he's optimistic about the impact of DeepSeek's new model.
The more supply, the more choice we can use on our AI hub, the better for us, actually. So I'm not concerned about that. To the contrary, competition, innovation on that front is extremely helpful for creating better products for our customers.
And Siemens Energy moves higher as preliminary Q1 revenue comes in ahead of expectations a day after being hit hard in the DeepSeek sell-off. A very warm welcome to you. It's wonderful to be back after more than a year away, back on Street Signs, and what a day to do it. It is the day after one of tech's biggest market routs in years, with European names reclaiming some ground in early trade this morning after concern over the impact of DeepSeek's latest AI model slashed $600 billion off of NVIDIA's market cap yesterday. That is the worst day for a single stock in history. And NVIDIA's plummet in market cap is larger than the entire market value of Netflix, to put it into perspective. So what a way to start the week if you were long the market, if you were long those tech names. I think for some of the investment community, it was a welcome development. A lot of the hedge fund community not in those names, and it's been a frustrating period for them. So it really has had something for everyone, the big market volatility that we have seen. Bringing it back to Europe, let's take a look at how the European market is trading this morning. You've got the stock 600 up about 0.4%. So investors finding their footing this morning after the big sell-off. There are a ton of analyst notes out there, analyst hot takes circling around as to whether the market sell-off we saw yesterday was justified or whether it was overdone. And if you thought it was overdone, man, that is an opportunity to get involved in some of these stocks that have really run away over the last year. Now, breaking it down by region in Europe, here's a picture for you. What's behind that modest uptick that we're seeing? You've got green across the board. FTSE 100 up 0.4% this morning. The Xetra DAX gaining ground about 0.3% higher. The CAC 40 and the FTSE MIB also in the green. Obviously, the magnitude of those moves fairly muted, but it is worth noting that we are seeing some stabilization come through the market. As for U.S. futures, let's take a look at where we stand. We've also got some stabilization there. The NASDAQ looking to bounce back by about 0.7%, the Dow Jones and the S&P 500. Of course, this comes after the massive selling that we saw yesterday. Now, looking at the European chip stocks in particular, we did see heavy selling in these names yesterday as well. You've got ASML this morning on some solid footing. ASMI down 1.5%. ST Micro and Infineon both trading lower this morning. It was those U.S. chip firms, though, that bore the brunt of the sell-off. This morning in pre-market, we are seeing a little bit of a bounce back. Nothing compared to the size of the selling that we saw yesterday, though. So NVIDIA looking to gain back about 4.5% at this early stage. Micron looking to gain back about 2.5%, Qualcomm and Broadcom as well. Now, the other part of the market that saw some brutal selling, the data center exposed energy sector. A lot of investors had really bulled up on these names on the basis that we would need increased power generation to power these data centers moving forward. If we're now looking at a world in which the AI space can create models that use less energy, then we won't need as much energy moving forward. It's obviously a hit for some of these names. So you've got Siemens Energy this morning trading 3.5% higher, but this comes after the stock dropped 20% yesterday. Schneider Electric, Constellation Energy, Vistra, those are the moves lower that we saw yesterday, and we'll keep an eye on those this morning. Now, CNBC has not been able to verify these claims, but Alexander Wang, founder and CEO of Scale AI, accused DeepSeek of violating U.S. export controls.
What we found is that DeepSeek, which is the leading Chinese AI lab, their model is actually the top performing, or roughly on par with the best American models. My understanding is that is that DeepSeek has about 50,000 H100s, which they can't talk about, obviously, because it is against the export controls that the United States has put in place. And I think it is true that, I think they have more chips than other people expect, but also on a go-forward basis, they are going to be limited by the chip controls and the export controls that we have in place.
Well, we are closely tracking all developments around DeepSeek. We've got a comment coming now through from DeepSeek that an issue has been identified and a fix is being implemented. Now, this appears to be in relation to the cyber attack news yesterday, which restricted registrations of the new application. It soared to #1 in the App Store in the U.S. So investors, consumers flocking to the app to understand what the offering looked like compared to the major U.S. rivals, ChatGPT, Perplexity, and the like. Now, continuing on this story, Donald Trump said the DeepSeek drama should be a wake-up call to U.S. tech firms after claims it cost only $6 million to produce its latest AI model put U.S. companies' mammoth capex under fresh scrutiny. Trump told reporters he sees the low-cost model as a positive development since it could mean less spending is needed to get the same solution. OpenAI CEO Sam Altman has welcomed the DeepSeek release, describing the model as impressive in a social media post. Altman said OpenAI will accelerate some upcoming releases, pledging to deliver better models. He also appeared to push back on expectations that future models would need less computing power, saying, quote, more compute is more important now than ever before. Speaking to CNBC, a NVIDIA spokesperson praised DeepSeek as an AI advancement, saying it showed how new models could be created using chips that comply with U.S. export curbs. Anthropic co-founder Jack Clark said in a blog post that the development would make AI controls more difficult, with global capabilities taking a, quote, one-way ratchet forward. Arjun joins us now with more on this story. Arjun, one of the things that captured my attention this morning was looking through and listening to the tech community's response to the emergence of DeepSeek. This is, the biggest threat to their business it might seem that they've had yet. And yet, we've got Sam Altman, we've got NVIDIA coming out praising the emergence of DeepSeek. Why are the incumbents welcoming DeepSeek at this stage?
I think they need to kind of show they're not perhaps jealous of some of these developments that are happening, and that they're supportive of innovation more broadly when it comes to artificial intelligence. Look, what DeepSeek has done is an incredible feat in the sense of being able to come up with a model architecture that is different to what OpenAI is doing and that can run more efficiently on less compute power. And that's really the kind of basis of this entire story. And the way they've done that is around the actual architecture of the model itself. You look at what OpenAI does and a lot of the other companies, the common wisdom was bigger is better. Keep going larger and larger with the parameters of these models. What DeepSeek's doing is using an architecture called a mixture of experts. And effectively, rather than one big model, there's a bunch of smaller models put together. And at any one moment, the model can kind of pick and choose where it's getting the information from. And that means it's not having to run the entire model all the time to get the answers. And so that's the basis model for DeepSeek. And then it's one of the models that has really caused a lot of stir is its model called R1. This is reasoning. So this works on a sort of basis of what's known in the industry as test time compute. So instead of scaling up the model size and the compute, they're focusing more on giving the model time to think, much like humans do. And so the model will come up with various avenues. You won't see it. It's happening in the background, and then feed up a response that is the conclusion that it's come to in regards to the prompt. And this is where it's been very impressive based on its foundational model and able to compete with some of the big US models out there. And so, there will be some fear, no doubt, within the US tech community about what China's been able to conjure up. But actually, there will also be, publicly facing at least some praise for innovation to show that, yes, we are still in a very innovative phase of the AI sort of journey right here. And so that's why you see Sam Altman and NVIDIA, et cetera, seeking to kind of show that they are in support of what DeepSeek's doing.
And it's not just that China was able to conjure it up, but China was able to conjure it up at a much lower cost base and with restrictions in terms of which chips they had access to. They didn't have access to the most advanced ones. Well, Arjun, stick around. Let's continue the conversation conversation with Ben Berenger, technology analyst at Quilter Cheviot. Wonderful to have you with us, Ben. Let me ask you about the market reaction we saw yesterday. I think investors today are going to be asking themselves, the main question they're going to be asking themselves is, should we buy into the weakness? Is this an opportunity here to get involved in some of these AI names which have soared of late, or is this the beginning of the tech bubble popping? What is your take?
So we saw very broad selling across all tech, really. It started in Europe with the semi-cap equipment names, and then when the US opened, Nvidia was weak. But we also saw Broadcom, Marvell very weak as well. Less pronounced reductions in companies like Google or Amazon. Meta was sort of up and down through the day, and Apple was actually quite strong. So people are being a little bit more discerning. It's not a broad sell-off. I think it's very important though to put this whole DeepSeek issue into context, right? So we've spent the last week listening to the US talk about their Stargate project, $500 billion, and we've had the US-China restrictions. It wasn't 3 months ago we were talking about scaling laws running out. This is clearly showing that people are getting more efficiency, and so the market is always going to be nervous when you've had the performance that you've had from Nvidia and the AI trade. But actually, I think this is quite a good thing for the industry in terms of an advancement, not just from hardware, but an advancement from software and the models that are being used. Arjun's absolutely right. V3, the base model, is very efficient, and so is the R1, the reasoning model as well. We can go into the details of how they are if you like.
It sounds like the expectation should always have been that the models would become more efficient, that this is always the direction of travel that we were hoping for. So in that sense, it is positive. But clearly it has taken some investors by surprise. Does this change where you should be investing your money? Does it change whether you should be going after the picks and shovels of the AI boom or some of the other players?
Yeah, look, I think this is always going to be the sort of broadening narrative, and we've seen some of that, like by the picks and shovels, then by the infrastructure names that sort of enable some of that. Then we can think about the software names. Those have started to they've had a mixed picture actually over the last year and a half. Those that have been able to show benefit from AI have really benefited. SAP has just reported some reasonable benefit there. Salesforce has sort of flip-flopped between a winner to a loser, as has Adobe. So yeah, this is this broadening that we're seeing. And then obviously there are going to be companies that are not tech companies that start to use this and see real benefits from it as well. So it's nothing outside of our expectations. Actually, it's very important to say that the benefits that DeepSeek have seen, though all those techniques have been around for quite a while, it's just that because DeepSeek has been forced by the hardware restrictions to have to use worse chips, if you will, older chips, they have to focus on model efficiency. But that's good for the whole AI complex, because it basically makes the cost of production lower.
Ben, it's Arjun here. Last year, through the tech earnings seasons throughout the year, a lot of the focus was investors giving leeway to a lot of the big tech companies to come out and say, hey, we're going to spend X billion dollars on AI infrastructure this year. Do you think that narrative changes as we go into the earnings season for US tech coming up? Is there going to be a lot of questions put to the executive teams around big tech about how much are you going to spend? Are you cutting back on CapEx? What does DeepSeek's advancements mean?
Yeah, so look, I mean, it's absolutely front and center is this evening, isn't it? So Microsoft report, they've already sort of soft guided an $80 billion CapEx number. And then we've also got Meta, they've soft guided 60 to 65 billion. So, and that, though they've given those sort of those guidances, they will have been aware of DeepSeek and some of the benefits that they've achieved. So I don't think it's going to change those numbers. Maybe in sort of it changes the 2027, 2028 numbers in terms of CapEx, but certainly for the next sort of year or so, I don't think those numbers change particularly. But you're absolutely right. There will be an awful lot of scrutiny around DeepSeek.
Of course, this is a big moment, I guess, for open source in the world of AI models. And a lot of the sort of conversations I were having with AI startups in the space last year was, yes, there are models that are getting bigger, but there will be a focus on smaller models. And ultimately, we think that models fundamentally become commoditized, that actually the real value is what's built on top of them, etc. And so are we beginning to see some of those predictions coming true with this?
Yeah, absolutely. So, the very best models will want to keep their secrets, to themselves. But if you're the second or third player, then being open source means that you have an opportunity to sort of try and catch up using the resources of the world, the open source community. And so you're absolutely right. And there's been lots of technologies, and some of them have won because they've been open source, and some have been won because they're closed source. We could go through a very long list, but if you are, my personal view on when we think about AI models is that they will commoditize over time, and you've actually seen Satya Nadella make comments in that direction as well. And so, the value, you're absolutely right, comes from if you own the data, and then how you use that data in your own proprietary way to leverage your existing business. And as I say, there are, in this sort of fourth phase of this AI revolution, there's going to be lots of companies, non-tech companies that are going to be able to leverage AI. And the really important thing, as I say, is if you bring the cost of inferencing down, that lowers the entry point, the cost of entry, if you will. So it's generally good for the world of AI. I won't talk about Jevons paradox. There's been lots talked about it, but essentially, if you can get the price to start to fall, the price elasticity should hopefully make the market bigger, not smaller.
Ben, well, perhaps we can talk about that next time. I want to just wrap up asking you about how this ties into U.S.-China tech dynamics at a political level. And clearly, Washington had tried to restrict China's access to advanced chips. China was able to innovate around this and come up with this low-cost rival to OpenAI, to Perplexity, and the like. We've seen Washington come down on TikTok. Obviously, that was the prior administration. But is there a risk, or perhaps a better way to say it, how is Washington likely to approach China moving forward? And is there a risk that the U.S. steps up restrictions on use of DeepSeek?
Well, let's just deal with the context into the concerns around DeepSeek. So as I say, last week we had Stargate and the $500 billion. We're moving into Chinese New Year. The Chinese, I think, would quite pleased that they had a response before Chinese New Year to sort of unsettle the US a little bit following the Stargate announcement. Do I think there will be further restrictions? I think there might be some geographic restrictions. If you think about the sort of semi-cap equipment ASML restrictions, they're already restricting the latest chips. And so it's hard to see, further restrictions there, but it's always possible. There are these rumors that actually DeepSeek used H100s rather than H800s. That's unconfirmed, but what will be happening at the moment, because this is an open source model, is lots of companies will be testing and trying to replicate the cost and performance that has been seen by DeepSeek. Do I think it leads to a further escalation? Look, I think this Cold War between China and the US continues. Exactly what the sort of next weapon or the next exchange of salvos is, I'm not quite sure, but I think it further increases the tension and just shows that AI is one of the new ways that these countries can compete. Do I think there'll be restrictions around usage of DeepSeek? Look, this is a consumer application. I doubt very much that large US organizations going to be using DeepSeek rather than ChatGPT. But I do think that the benefits that DeepSeek have shown will be proliferated into other existing models.
Well, Ben, thank you so much for sharing your thoughts. It's definitely interesting to see that Trump's first response has been that it's a wake-up call for the U.S. He hasn't used it as an opportunity to antagonize China. So we'll see how it plays out. But Ben, thanks for sharing your time. Ben Berenger, tech analyst from Quilter, Cheviot, and Arjun, thank you for running us through the detail on the tech side. Now, U.S. President Donald Trump says Microsoft is in talks to buy TikTok, adding he would like to see a bidding war for the social media app. Speaking to reporters, Trump said he saw great interest in the app from a number of companies. The U.S. president previously said he was open to Tesla CEO Elon Musk or Oracle CTO Larry Ellison buying the app. Microsoft and ByteDance have not responded to the comments. Coming up on the show, Sartorius shares are on a tear as the company beats revenue expectations. We'll be speaking exclusively to the CEO, Joachim Kreuzberg, after this break.